Good morning to all the participants on the call, and thanks for joining this Q3 FY22 earnings call for Elecon Engineering. Please note that we have mailed out the results, and you can also see the results on our website, as well as it has been updated in the stock exchange. In case if you have not received the same, you can write to us, and we'll be happy to send this thing over to you. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result, performance, or achievement to differ significantly from what is expressed or implied by such forward-looking statements. To take us through the results of this quarter and answer your questions, we have with us the management of Elecon Engineering, represented by Mr. Prayasvin Patel, CMD, Mr. Kamlesh Shah, Group CFO, and Mr. Narasimhan Raghunathan, CFO. Mr. Prayasvin Patel will give a brief overview of the quarter gone past, and then we'll open the floor to Q&A session. With that said, I would now hand over the call to Mr. Prayasvin Patel. Over to you, sir.
Recording in progress.
Thank you. Good morning, everyone. Ladies and gentlemen, a warm welcome to our Q3 FY2022 conference call. The company's performance continues to be growth-oriented and has positive outlook. Discussing the results at the standalone level, the total operating income stood at rupees 184.8 crores compared to rupees 228 crores in the corresponding quarter of the previous year. EBITDA on absolute basis stood at 33.6 crores as compared to 37.6 crores during the corresponding period of the previous year. This translates into an EBITDA margin of 18.2% in Q3 FY22 compared to 16.5% in Q3 FY21. We closed this quarter with a net profit of rupees 15.8 crores as compared to 12.4 crores during the corresponding period of the previous year, reflecting an increase of 26.9%. This quarter's performance may not be comparable with that of Q3 FY21, that is last year, since Q3 FY21's performance was after the pandemic lockdown and related business scenario. We have mitigating price increase on raw materials and international logistics cost, though it has impacted to some extent. Let me highlight few points related to the results. We are witnessing strong order intake in gear business and remain positive due to favorable demand environment. We are also eager to see the outcome of recent India budget, where substantial spend towards infrastructure and capex is expected. Our efforts to increase exports is yielding good results. Coming to the MHE business, we continue to focus on profitable product business. Efforts are being taken towards completing the punch list items, being part of the COD process to hand over legacy projects. Moreover, we have been granted arbitration award worth 63 crores plus in our favor. While counterparties are pursuing appeal proceedings, Elecon is confident of recovering the same. One of the key focus areas of the management has been in terms of debt reduction, and this clearly reflects in our interest cost, which has come down significantly. Coming to consolidated financials of Q3 FY22, the operating revenues were rupees 270.9 crores, while we recorded an EBITDA of 52.3 crores. The EBITDA margin has improved to 19.3% in Q3 FY22 as against 18.9% in Q3 FY21. The consolidated profit after taxes stood at 31.5 crores for Q3 FY22 as compared to 24.7 crores in the corresponding period of the previous year, an increase of 27.8%. All our overseas entities have now turned profitable. We are working towards further improving our market reach in USA, Canada, Latin America, where we are witnessing positive momentum in order intake and revenue. We are witnessing gradual pickup in demand on the back of recovery in economy, and we saw a significant ramp up in the order booking with orders worth 211 crores booked in the gear business, and so orders worth rupees 30 crores in the material handling business during the quarter. In the gear business, the orders on hand is rupees 345 crores, and in MHE business, the orders on hand are rupees 66 crores. To summarize, we continue to focus on strategies to create long-term value for our shareholders. This includes becoming debt-free at the consolidated levels by FY23, debottlenecking and ensuring better utilization of available capacity, working capital optimization and cost control, lead time reduction. We are confident that streamlining of existing operations along with reduction in debt is likely to lead an improvement in EBITDA margins and overall profitability. Moreover, the proposed increase in government capital expenditure announced in the recent budget augurs well for the industry and is likely to result in substantial growth for the sector in the coming years. Thank you all. We will be happy to address your specific queries about the business going forward. Thank you.
Thank you. Anyone with a question, request you to please raise your hand. Once you are in the queue and you begin to ask a question, request you to introduce your name and the institution name. So we'll just wait for a moment before the question queue begins. We have the first question from Mr. Suvam. Please go ahead.
Yeah, thank you for the opportunity and good morning, Team Elecon. Sir, my first question is related to the gear division. So if we see since the last few quarters, our total order in hand has been quite range bound. It has been around 340, 350 crores. So I wanted to know, as per your internal estimates, and given that now there has been a lot of announcement regarding investment in infra and all, how do you expect this order inflow to see a decent uptick going forward?
See, basically, to tell you honestly, earlier in the last couple of years, what used to happen is the orders would come in spurts. So there was no consistent order inflow which was healthy. Now, the reason why I say healthy is because you need a backlog so that you can start planning, design, engineering, material procurement. All this takes time. So with this consistent flow which is remaining right now is a very healthy situation. And apart from this, in the recent month or two, we are seeing an upsurge of orders further increasing. So which is a very healthy scenario. And this is in spite of the fact that the prices of steel have increased as well as other inputs have increased. In spite of all this, the order inflow has been healthy. The price realization has been good. So all in all, it's a very healthy scenario.
Fair enough. So secondly, now there is a hypothesis which says that globally in US and Europe especially, the steel prices are increasing significantly, and going forward it will further increase because of their various CO2 emission norms which are coming into play. So in that situation, given the steel price remaining quite low as far as India is concerned, so there may be a situation wherein engineering product out of India can see a very high growth. So in this light, what is your view and how are we placed in that scenario?
Normally, what we have seen is steel prices internationally find a balance and remain more or less similar. Okay, generally speaking, all over the world, because otherwise steel tends to migrate from one place to the other in a big way. China had originally, if you remember, years ago, China had lower prices than the international market, and therefore the sales of Chinese steel was quite high. But over a period of time, they find an equilibrium. So what I believe is it may happen temporarily, but after a while, it will have to be at the same level. But as I told you, if that happens, then naturally we would be at a much better position because our products would be cheaper than the competition, which would give us a definite advantage.
Right. And in the last call, you did mention that you are looking at few opportunities globally, especially in America. So, is there any breakthrough that you would like to, share with us regarding acquisition or any other, update?
No, there has been nothing. There has been no development whatsoever. In case anything comes in, definitely there would be an announcement.
Right. And lastly, on the MHE division, now again, on the last call, you did mention that the EBIT reported in last quarter was more or less maintainable. But now again, we have reported close to 7 crore of loss. So I just wanted to understand how can we see this division going forward? Where will the revenue stabilize? Where will the margin stabilize? And given now that we are at the last leg of legacy order, and also if you can mention as to how much is the retention money that is still left that we can get out of this business.
Okay. Okay.
Sir, I reply, sir?
Yes, please.
In regard to what you mentioned about the Q3, where we've seen some hit in our MHE business. However, it is just a non-cash item which is there, which came as a part of our settlement with the customer whenever we are closing our legacy projects or other projects, other part of that. At the same time, you also have seen that there is an arbitration award also which is there in our favor, which we are pursuing, though the customer has preferred a further appeal to the next level of the arbitration. So we are working towards the same. And we believe that so far the current businesses are concerned, we are quite comfortable in terms of our profitability and liquidity. And we are also conservative in terms of selecting the projects.
So is it fair to say then the 7 crore loss was only one time? Now going forward, we would not report loss in an ideal situation?
I will give you an answer to this. See, what my colleague was trying to explain to you is, first of all, there is no cash loss.
Okay.
Okay. So we have to understand that it is not a cash loss that we are talking about. Number one. Number two is when we are trying to close contracts aggressively, at the end, the customer quite often negotiates with us that this is the amount that we will pay and this is the amount we won't pay. Okay. So it is a situation of give and take. Okay. Apart from that, we have to understand that suppose we do not agree with the client, then we have to have a recourse to arbitration, and then from arbitration it goes to the courts and so forth, and then you get a decision after 6, 7, 8, 10 years quite often. Now, quite often the management takes a practical approach, whether it is worth letting a certain amount go and still get majority of the amount rather than fight with the client. Because first of all, it creates a bad feeling. On top of it, you will get money after 8 or 10 years where that value will depreciate to a very large extent. So considering all these factors, quite often we have to take some practical decisions, which we take. When we tell you that as of now, we are at a 0-0 level, that means that till the contracts have not been closed, this is what we see the scenario. In case we have to take certain practical decisions of this kind, then it gets impacted. But as I told you, in the operations of MHE, Material Handling Division, over a period of time, we have pruned the organization considerably, and we have seen to it that we change the entire dynamics of the organization so that we become at least go to a 0-0 level. There are cash losses. As a matter of fact, from next year onwards, it will start making a reasonable amount of money also. So all this is being done, okay? And aggressively, on the other hand, we are trying to close all the old contracts. We have been successful. And as Mr. Kamlesh Bhai said, that in the arbitration, we have won 62 crores worth of value in the contracts, okay, which then the customer has again gone to the courts to buy time further, and that will continue for a while till we get this amount.
Thank you, sir. Thank you for a elaborate answer. And lastly, I wanted to know the 30 crore inflow in the MHE division. This is all related to products, right? Which
Yes.
now, okay. So this is now all profitable inflow of contracts.
Yeah. So as I told you, the products that we sell them where there is profitability, as well as there is an after sales division that we have, which is catering to spares business and services that the customer requires, and which is also profitable.
Thank you. Thank you. Thank you, sir. I'll come back in the queue.
Sure.
Thank you. We have the next question from Jaki Nasir. Please go ahead.
Good morning, Praveen Bhai, and congrats for stabilizing the company so well.
Thank you. Thank you.
Sir, historically, Elecon has been getting a turnover of 1,200-1,500 crores over the past decade. Now we have restructured our material handling division and given new trust to the gear division. Sir, going forward next 3 years, what do you expect the top line to stabilize at? This is the first part of the question. So second, a couple of con calls back, we had mentioned that we are looking at alternate uses for our material handling facilities, sir. What are your thoughts on that? Thank you, sir.
I'm glad you asked these questions because these are very important questions that you have narrated. Basically, the way things are panning out, there is going to be an increase in turnover because, first of all, we are sitting on a capacity utilization which is around now should be around 55-60%, which was much lower earlier in the gear division. So there is a scope to further increase the turnover. It all depends on the order inflow. Looking at the present Indian scenario, the inflow of orders have started increasing, and we presume that will bring in a further increase in turnover in the years to come. That is number one. Number two is this will also reflect in a similar way with material handling. Though, as we said, that we are not interested in taking contracts right now, okay, projects, but we would be still selling our products, okay. Our after sales business, which is the spare business, continues to remain healthy. So all in all, we see a very rosy picture. Apart from this, in the gear business, there is also a growth in the export business, and we are still trying to give further thrust in those areas, reaching out into countries where we have not been as yet, so that the growth would be further there. So as I told you, right now the scenario looks extremely rosy in all directions.
So, sir, can we reasonably assume that maybe next 2 years down the line we will stabilize at 1200 crore plus in terms of top line, sir?
Looks like it, yes.
Fantastic. And sir, about the alternate use of that material handling facility which you had mentioned, so is something happening on that front, or will it take some more time, sir?
We are actively pursuing, because we have machinery which is catering to very large components and very large kind of fabrication. It is not easy to look for such kind of things. They go into only specific certain types of industries, and therefore we are pursuing it. But we are also very judicious, because we want to go into areas only where there are healthy margins, because we are not interested in going into areas where there are low margins and very high competition. So we want to do work which is high precision and where the margins are healthy. So which is taking a bit of time, but just the same, we want to only go into areas which would make money for the company.
Thanks a lot, sir, and best wishes for the future, sir.
Thank you.
Thank you. We have the next question from Sunil Kotari. Please go ahead.
Thank you very much, Prasin bhai. Congratulations.
Thank you.
Thank you, Prasin bhai. Sir, really, it's a very positive to listen about the way we are reducing our interest costs, debt reduction, and making us debt free. After long, I think, and it will help us for very long time to have no debt on book, because it has troubled us a lot during last maybe 5-10 years. Really commendable, sir. Sir, my question is on the opportunity which we are trying to capture internationally. If little bit detail, if you can talk something, what type of opportunity is opening up over next 3 years? Any size, any numbers, any specific, if you would like to talk?
Sure. First of all, let me tell you that the operations which have been happening, see, today we have our marketing arm in Singapore on one side, another marketing arm in Dubai. These two arms, the Singapore one caters to the Far Eastern area. The Dubai arm looks at the Middle East and Africa area. Then we have Europe, which looks after Germany, Holland, Netherlands, France, and all these areas. And then we have the UK. On the other hand, we have United States, which looks after United States, Canada, and South America at the bottom. So this is the general structure. What I would say is the first intention was that we make them profitable, and we make them profitable on a consistent basis and not by a microscopic amount. So, which we have been able to do over a period of time. The challenges in America were a bit different, where we used to make losses because we had set up an infrastructure in such a way that almost every state was being handled by individuals, which we had to cut down, and we had to replan the entire strategy, which we have been able to do very successfully. And now we have become profitable, and going forward, it is going to generate good and very good healthy margins for us. The demand for products also in America have been of a different kind, okay, which suits us extremely well, because those products, the demand in India were reducing. Now, with the international demand increasing, those products have become reasonably good for us to manufacture because it is utilizing the capacities in a very healthy way. Okay, they are especially worm gearboxes of very large size. Okay, so all in all, the teams have been doing very well. Okay, on the other hand, America has now started getting orders from South America, including Colombia, Chile, okay, and various other countries in South America. We have deployed agents out there who are also doing a good job. Okay, America and especially Canada has also worked out to be quite well for us. We are getting reasonably good orders from that area also. So all in all, it's a healthy scenario. We, as the period of time goes by, we intend to deploy more of our dealers or agents in various territories because these countries quite often are very, very large, like Canada and United States. So adding more dealers and agents would help us. And overall, the product acceptability has been very good. And our customers whom we have serviced up till now have been very happy with the product as well as the services. So we feel very confident that going forward, we should be able to grow our business to a considerable extent.
Great. Sir, my next question is to Kamlesh Bhai. I mean, you people are doing really great job of debt restructuring, interest payment, substantial reduction. So my question is related to this MHE, the non-cash loss which we have shown. Any one-time write-off or revenue derecognition or something has been taken, and if you can explain in this call and onwards any future communication to investor. If you can specifically mention about the past losses, legacy, business-related losses, and current situation. So it will help us to understand what currently we are doing and what is hurting us. And related to that, we have mentioned in our key initiatives about MHE that we are expecting to complete 2 major projects. One is in Q4 and another in Q1 next year. So any ballpark numbers, if you can provide possibilities of losses, that will help investor to understand that there is a possibility of some write-off coming on this. And if it is clearly mentioned during result presentation, that will enhance our confidence and trust. So I would like to know any one-time this type of things happen in MHE during Q3 and possibility during Q4 and Q1.
Good morning, Sunil. Sunil, what presently, whatever is to be done, I think we already did. But if you see about the future, presently we are all on the closure of all our legacy projects. We are about to close, one by one all the projects.
True.
So what we have just required is, we have to get our retention money released from the customers, and wherever some price difference it is there also. So these are nothing but which is in the negotiation with the customers, and presently we can't spell out what it will be there. However, considering our confidence and the way with the customer level, that particular PSU level, the machines are working, we are confident that it will realize our money. Yeah, though we at the last phase and we may be just forgo some consideration and how much time it will take.
True.
So my request to you, because just give some time, maybe by March or maybe by June, sometime at least we will have some clarity about where at least we are in terms of our realization of sticky receivables in MH.
Okay, sir, but can we...
Sunil, I will tell you how this thing works.
Yes.
See, it is, say, suppose tomorrow I want to close the NTPC order. Okay. First of all, they should be in the mood to close the order. I will explain to you. There are times when this is an extreme situation, but we have to run away from the site because they are not interested in taking over the entire project and running it on their own.
True.
If you are running it for them, then why should they run it? It is like they are producing a power using your equipment, but they will find some excuse or the other so that they don't close the contract. So you have to keep on running all the equipment. Okay. Your manpower gets consumed, your maintenance, continues, as well as the insurance and everything else is also on your side, which means your insurance company, you keep on paying the premiums and they keep on getting all the benefits.
True.
Okay.
True.
Now, for whatever reasons, ultimately, if they decide to close the contract, they call you and you sit across the table and you discuss how to close the contract, where you would tell them that these are the extra costs that you have to levy because of either escalations or due to any additional work that you have done, any additional services that you have provided, etc., etc. That is the time that they talk about compensating it with LD. Okay, so it is practically a negotiation that takes place, okay, of how the contract would be closed. And in turn, they quite often arm twist you and try to close the contract.
True.
And therefore, it is very difficult to ascertain what ultimately would be the result, whether there would be additional amounts which have to be booked in by us or not, or we would tend to gain ultimately. Okay. Our intention always is, Sunil Bhai, that looking at the pluses and minuses, we try to come out with some certain plus amount rather than negative.
Great.
Okay. And their intention is always to bring it to a negative so that they don't have to pay you anything. So this is the scenario that continues, and therefore it is very difficult to give you an answer as of now. But as far as what we see is what we represent to you. Over a period of time, when the clarity comes in, that is when we try to put it in.
Sure. President, we really appreciate this clarification. Just one request is if you can clarify after the result, wherever we provide this presentation or results not, that this is related to something past numbers. If you can explain, that will be really helpful to the investor community. That's all. Thank you. Thanks a lot and wish you good luck, sir.
Thank you.
Thank you. We have the next question from Anurag Patil from Roha Asset Manager. Please go ahead.
Thank you for the opportunity. Sir, as per your last annual report, there are around 160 crore plus contingent liabilities and some 340 crore plus corporate guarantees. So if you can please elaborate on what is the current status and what is the possibility that these things can impact us in the future?
Anurag, hi, this is Kamlesh. So far the corporate guarantees are concerned, as we already paid off and settled all the loans at overseas, the corporate guarantee is now no more in existence. So we are, this corporate guarantee is released now. So there is no corporate guarantee as on today, which are outstanding. In regard to the other contingent liabilities, so we also settled the most of our litigations related to tax, and now at least very minimal amount is there, which is continuing also.
So how much would be the current amount contingent? Any ballpark figure you can spell?
So except for this corporate guarantee which has been closed, balance all relates to tax related litigations, not significant movement due to courts not functioning, not a significant movement over there. But we see that in the upcoming months, we see that increased activity hearings has been happening. So as of now, not major changes.
Okay, fine. And sir, what is the consolidated order book, including the overseas subsidiaries?
It is 501 crores.
Sorry, pardon.
Including standalone, it is 501 crores.
501. Okay, sir. Thank you very much. That's all.
Thank you. Well, the next question from Neeraj Mansika from White Pine. Please go ahead.
Yeah, thank you for the opportunity. A few things, sir. Can you give color on the business environment on the gear business. I think you had said in the past about huge growth potential in the export side, and you see the target going to 45% of the revenue share. And also wanted to know share on how much is the competition and the pricing scenario as a gear business concerned. Yeah.
See, as I told you, we intend that it would be healthy for us to rely on the Indian market to the extent of 60%, and 40% should be from the export area. Okay. There's a continuous striving that we keep on doing to reach towards 40%. However, now we are seeing that there is an upsurge of orders from the domestic market. And therefore, again, the percentage to maintain where we are today still becomes more and more difficult. So this is a normal situation which we try to come across. The margins in India have improved considerably after COVID because of the fact that we have been very particular to see to it that we maintain a healthy margin level in the domestic market also. Normally, the export market gives us a healthier margin than what we get domestically.
Right.
Which is the positive part, because there are a lot of companies in India who export at a lower price than what they sell in the domestic market, which is not the case with us.
Right. So, but then if you're running at a utilization of 55% and you're having an upsurge of orders in domestic, how soon can we see this utilization increasing? Because the exports are profitable, so so what is stopping you from increasing your utilization in the gear business?
See, it is the inflow of orders. Because let's understand one thing, that when we go into the international market and if we go into countries where we have not been there before, the acceptability of Elecon products becomes difficult. The reason is we are from India and not from the Western world. That itself requires a considerable amount of convincing with the client. The second thing is that since they have not experienced our products in the past, it is difficult. However, we have seen that once the company starts utilizing our products and finds out that the products that we supply to them are robust and reliable, they then tend to give us repeated orders.
Got it, sir. So last question, again, coming back to the same thing. You said about there's a lot of upsurge in the domestic orders. Can you give some more color to understand how sustainable and how long term it is and which sectors are driving?
I would say overall, the area of infrastructure building, naturally, as you know, is in a very healthy situation, and it will keep on improving further, because if you have seen even in the budget, the finance minister has been emphasizing on infrastructure building, okay, and additional amounts being given to that sector. So that is an area, and the industries which are related to that are also going through a big upsurge. Pharma is doing extremely well, okay. Similarly, we see also a healthy inflow coming in from the cement industry. So these are a few industries which are doing well. Steel also is again showing a reasonably healthy trend.
Okay. Good. Thank you, sir.
Thank you.
Thank you. We have some question on the chat board. So Prasant asks, what kind of turnover and profitability we can expect from material handling division in next 1 year? And is it possible to show some write-off, a one-time loss in the MHE division in the results?
As we said, Prashant, that it is very difficult to have a one-time loss in material handling, because as we keep on closing contracts, we will know more as to where we stand and whether there is any additional losses to be booked. Okay. As of now, it looks like we don't have losses to book, and we have money to recover from the clients where we are closing the contracts. Okay. But only time will tell. That is number one. Number two is we are expecting that our turnover will go up in the material handling business because of the fact that recently we are seeing a good requirement of product inquiries which have come in, and we believe that the way the economy is progressing, that there would be further demand that would come. I would not be surprised if we see at least a 20% growth coming in for at least 1 or 2 years.
Thank you. There's one more question. He says, what is the current debt as on 31st December 21? He says, whatever losses we have taken during the quarter. I don't know what he means by that.
Kamlesh bhai, would you like to, or Narasimhan, would you like to answer this?
Yeah, the fund-based debt is around 168 crores, 170 crores.
Our current debt position is 170 crore as the standalone, and overseas we don't have any debt as on today.
Thank you.
And I can add to this that we are expected to get to 0-0 level by FY23 end.
Thank you. We have the next question from Saket Kapoor. Please go ahead.
Namaskar, sir.
Namaskar.
Sir, as you have articulated in your when you explain us how NTPC and other players while executing orders you are facing some headwinds. So, sir, out of the total business proportion, how much is from the government sector and what is the balance from the private sector? If you could give the split of the business done and also on the order book front.
See, the contracts which we are going through a closure right now, practically, I would say more or less everything is belonging to the government. Okay. So it could be the central government or state governments. Okay. Product orders which are now coming in are more from the private sector than from the government sector. Okay. Which is what is happening in the last 1 or 2 years. If you want values, then we will have to dig in and probably send you an email and give you all this information.
Sir, as you were mentioning about cement industry, steel industry, the buoyancy there, and they being our major client, if you could give a ballpark number in percentage term, which industries will be our major clients और जिनसे हमें order inflow की जगह बनेगी going forward, sir. अगर आप इसको category बताएं, rather than giving a wide spectrum.
If you look at the pie chart of the gear business, it is broken up into small parts everywhere. There is power sector used to be one of the largest once upon a time, which used to amount for almost 20+%. So you can imagine if that is the largest, okay, the others work out to be very, very small slices of the pie chart. And therefore, it is very, very difficult to tell you which one is going to increase beyond or go above the other. As of now, there is a buoyancy in the areas that I have mentioned earlier. Okay. How much would that be? It will depend specifically upon the inquiries that are being received.
Right, sir. And so particularly coming to the NTPC part, sir, I think in the presentation also there has been some mention about NTPC or order backlog and getting executed and the completion happening by the first quarter FY23. So what is the size of business that we have done for NTPC for these 9 months और अभी कितना backlog बाकी है और इसमें भी सर अभी कोई और litigation का issue है कि it is all clean business?
नहीं, see, litigation का कोई सवाल ही नहीं है. It is the question of almost everything more or less has been supplied from us. Whatever that needs to be supplied from head office for the equipments have already been supplied. Erection and commissioning is what is going on. Okay. Minor civil work which is pending has to be completed. Certain products have to be tweaked for the completion. That is what is going on right now. Okay. And if the COVID had not attacked us, we would have completed these projects probably 3 months ago or maybe even 6 months ago, because there were 2 waves of COVID which hit us very badly, and which is the reason why these delays have occurred. But we are hopeful that we will be able to finish them and get out of it fast. Okay. As far as we are concerned, okay, these final settlement would take place soon, and our dues would be received.
Right, sir. Can you quantify, sir? You in your presentation you have mentioned that project completion status expecting to complete major contract of NTPC by Q4 of FY22, and another major project is expected to close by Q1 FY23. So, what is the quantum of the revenue? And sir, one more point, when you were telling about this जो आपने बताया था कि टरकाने वाला जो process चलता था कि जिसमें they used to use our equipment and all, उस समय से revenue booking का क्या process रहता है? When can we book the exact revenue? Even when they are using our equipments for trial runs and all, or when there is the completion? Just wanted to have that understanding of the nature of how the business revenues are booked. Sir.
Kamlesh bhai, would you like to answer this, or Narasimhan?
Yeah, Narasimhan.
So as CMD has clarified, in NTPC, we are in the closure of the projects. There is no further revenues to be recognized on that account. And in terms of the quantum from NTPC, we have got at least the major ones are 2 numbers, out of which both are expected to close in this quarter. One definitely has been closed very close. Only the final sign off is this thing, and the other one is also expected to close. And then there are these are the 2 major one from NTPC. So from in terms of fresh revenue, we don't expect anything to be booked now. Maybe the last milestone, few activities could be there. So that's not a significant one.
No, sir. For Q4, we won't be booking any revenue from on this project. So when you have mentioned here, it is only the completion status. The revenue booking would be done, or the revenue booking has been done earlier?
The revenue booking has been done already. Okay. There is no fresh revenue booking.
So only now,
both for Q4 execution and Q1 execution.
Yeah.
Okay, sir. So when didn't understand, sir, the nature, sir. How are we booking our revenue earlier before the completion of project?
Yes. No. This was always, the percentage of completion method, we had to recognize revenue. And in fact, as what you could understand, over the period of past 4-5 years, based on the completion, we have completed virtually 98-99% or sort of thing. Only the last milestone activities, which may not be that much significant for the activity which we are currently doing. All these years, we are only waiting for the customers to proceed us with the testing and final completion activities, sign off and other things. So that is not a sort of a revenue. Based on the activity we have completed, we already recognize the revenue.
So what are the receivables, sir, from for this order, sir? How much are the receivables pending from them, since the execution is not complete? There must be retention money from NTPC. So how much of the fund would be released, sir, for post Q4 and Q1?
Maybe we can provide you. We don't have the immediate numbers available. What is the receivables and things like that? It should be coming from the financials. We can specifically clarify to you over email.
Saket, we would request you to come back on queue. We have the next question from Ankit Babel. Please go ahead.
Yes, sir. Good morning, sir. Ankit Babel here from Shubham Ventures. Sir, a couple of questions. Sir, when the macro part is so strong, both domestically and internationally, so what kind of growth you are looking at in your order inflows in the next year in the gear business, sir? Both standalone and console level, if you can tell. Hello, was I audible?
Yeah, just hold on. I think Mr. Prasvin sir is not connected. Just let me check.
Just hold on. I think there is some connectivity issue with CMD. Please hold on. Yeah. Please hold on. He is just trying to log in again.
Yeah, sure.
Hello, sir. May I continue, sir, or the last speaker?
Yeah, you just maybe.
Yeah, Ankit, you can continue. He's joined now.
Should I repeat the question?
Yeah, you can repeat the question.
No, is Mr. Patel logged in now?
Yes, he is logged in.
Okay.
I have logged in.
Yeah, yes, sir. Sir, what I was asking was that when the macro part is so strong, both domestically and internationally, so in that scenario, what kind of growth you are envisaging in your order inflows, say next year in your gear business?
See, we would see at least a growth of the way it looks like as of now, the scenario, we should be able to at least log in a growth of 20%.
Okay. And sir, in the last call also, I had asked you this question, and I'll just repeating that. In the current year, a good part of your execution was from the marine side. You know, the gearbox from the marine order, which won't be present in the next year, as you are expecting it to finish it off in next couple of quarters. So on a reported basis, what kind of a growth you are envisaging in your consolidated gear business revenue, which includes the overseas parts also? In that, assuming and that there won't be any order from the marine side.
Partially, the execution would continue next year. Okay. There is a residual part which would remain, which would go on to the next year, as we expect as of now. And then there could be other requirement, okay, which has come in recently for equipments and spares, which would also bring in additional revenues. So all in all, we are expected, as I told you, to grow both consolidated Navy business as well as the rest of the gear business to grow at approximately 20%.
So actually here there is a slight confusion because in the last quarter you mentioned that you'll show a flat growth in gear business in the next year, and now you are envisaging a 20% growth. So can you quantify the number to remove the confusion? What kind of revenue you are targeting this year in the console gear business, and on that base, what you are targeting a growth? At a ballpark number. A ballpark number will be fine. So last year, for your reference, I can tell that it was 905 crore consolidated transmission equipment revenue in FY21. So apple to apple, what kind of revenue you are looking at in this segment at the console level in 22 and 23, as it will remove all confusion?
See, as I told you, compared to what we will do this year, the growth is expected to be 20%. Okay. However, it is very difficult to ascertain very clearly. As I told you in the last meeting or the last investors meet, we had said that we are expected to do more or less the same. Is the fact that the revenues for the Navy business was not expected to remain the same or was expected to reduce. But now we see a hope because there are present inquiries which according to me, if it materializes fast, there is a possibility that we would be able to execute that entire project by end of next year. So if that happens we would be at more or less year on year the same invoicing as we did last year. And we are expected to grow at 20% in the rest of the business.
Okay. So my second question is, you did mention that in the current quarter there was some non-cash one-off write-offs of provisions in the MHA division. So can you quantify that amount, sir? What was it in Q3?
Narasimhan, can you take that call?
Yeah, yeah. So on Q3 level, if it's on a net basis, our write-off in Q3 is nearly 3.25 crore.
Okay, so you did a revenue of 20 crores and a loss of around 7.5 crores. In this 7.5, around 3.5 crores was this non-cash item. So still there was a loss of 3 crores on a revenue of 20 crores in the product business.
This is because there are some fixed overhead, because our revenue this time was only 20 crore in MHE division. So because of that, sales turnover base also, there is it is because of that also, because of my fixed overhead.
Okay, so again a question continuing from the previous quarter's conference call, that Mr. CMD had indicated that the MHE division is expected to do a turnover of around 150 to 180 or 200 crores. It will settle anywhere between these two ranges. So assuming a 150 crore revenue, what could be the core profitability from the product business, excluding any one-offs which might come?
So if we do the turnover of say 150 crore, both product as well as my spares business, we can expect the profitability to the tune of between 10 to 15 crore rupees. Depend how the product mix works out.
Okay, sir. I'll come back in the queue, sir. Thank you so much.
Thank you. We have the next question from Neeraj Mansika. Please go ahead. Neeraj, please unmute your line and please go ahead. Okay, we'll take the next question from Pratik Agarwal. Please go ahead.
Can you hear me? I was muted by mistake.
Okay, fine.
So in the past, you had, if you see the gear business, you had reported EBIT margins of in excess of 25%, but in the last 3 quarters it was lower. So can you give us some color? Is it because of the pass on of the prices, which was of the steel prices, and is it possible the margins to go higher because of the stability in the steel prices?
See, I would not like to commit that the margins would go higher or not. But all I can tell you is that if the turnover increases, since the fixed cost gets distributed over a large number of orders, there's a possibility that the margins may further increase. Any
hypothetical numbers you can share on that? Say if the utilization goes to 70% or so, how much can?
No, because it will also depend on the product mix. So it's very difficult to generalize. And as I told you, the only thing I can say is that the more you produce, your fixed costs get distributed over a higher turnover, and therefore they tend to increase.
Okay, great. Thank you very much.
Thank you.
Thank you. We have the next question from Pratik Agarwal from ITIMF. Please go ahead.
Thanks for taking my question, sir. I have just one question, data point regarding it is breakup of your gear business and MHE business. What would be the product to project ratio in both of them? The context which I'm coming from is basically I'm trying to understand that, as I understand that you are trying to reduce your project profile and be more in products. So is it that the project, the issues we are discussing regarding NTPC, maybe marine order getting over? So is it those the project orders that are finishing off, and then only mostly product will remain? So from that context, I'm trying to understand like with what is the profile right now, and in future would it be most of it would be product?
See, in gear division, there is nothing like project and products, because all of them are products. The way we do the marine business, it is deemed to be a project because of the entire execution of various ship sets that we do. Okay, but however, ultimately they are being invoiced like products. So you can say that the gear division has 100% products. As long as material handling is concerned, practically all project business has more or less come to an end. Okay. Now I will explain why I would say come to an end. All the products, or in the project work, the products which are being used have been dispatched to site, and there is completion of the work which is happening at site. Okay. A lot of these contracts have been closed. Some of them are on the verge of getting closed. And some have not even started as yet, though the order has been received 2 to 3 years ago. Okay. Not a single line has been drawn, which would tend to get cancelled over a period of time, hopefully. But otherwise, everything else is either after sales, which is, or there is product business, which is pending in material handling, pending orders.
So there's 66 crores of MHE order book. That is mostly project which will be getting over in some short span of time.
No, it would be basically product orders or after sales, that is spares. Would be a combination of that.
Okay. And that Navy order marine order that we're discussing, that even though it is, it will fall into the product in the gear. It will fall into the gear segment as product order.
Yes.
Okay, sir. Okay, sure. That was my only question, sir. Thanks a lot for answering it.
Thank you.
We have the last question from Saket Kapoor. Request you to limit a question to one because we have already crossed our time limit.
Yes, sir. Sir, our question is pertaining to this MHE division only, sir. Just wanted to understand, sir, what are the current constraints in this division that the revenue trajectory is lower and therefore the profitability is also lower. So for going forward, how is this division going to contribute to the total top line, and how is the profitability going to shape up, sir, going forward? If you could give some more color. And inventory built up, sir, what we have seen for this quarter, sir. अगर उसका explain करते कि what is the nature of this inventory, and going forward, how is this going to affect the P&L? That was the question, sir. If please.
As far as material handling is concerned, as you know, we have stopped doing project orders. So the turnover has dropped. However, we are doing products where we are being very, very choosy because we want to take orders with only orders which would give us profits, and profits that too of a reasonable type and size. Okay. Why I say type is because it will all depend on the payment terms also. Okay. The rest of it is our spare business, which is also reasonably healthy, and therefore which has got healthy margins. So all in all, when we say 150 or 160 crores of turnover, it is all that is going to bring in positive margins in the organization. Our intention has always been that you improve the profitability and not only improve the top line. Okay, so the top line has to go up only provided it brings in positivity at the bottom, which means brings in profits. So this is what we are planning to do. However, as I told you, that we have spare capacities available in manufacturing, and therefore we are looking at alternatives where we could utilize our facilities and increase our turnover and improve our margins further. So this is the game plan.
Sir, do we have this peer comparison factor, international conversion in the southern India? Are there your competitors in the same vicinity, in the same product profile?
No, they aren't.
And peer comparison, sir, can you give for the material handling segment so that we can have an outlook on the industry also? Who are domestic players we are competing to of your size?
In material handling, we are competing with the likes of L&T, ThyssenKrupp India Limited, also the multinational in South India, which is I forget the name.
No issue, sir. I'll get it offline, sir. Not an issue, sir. Thank you for all the elaborate answers, sir. So we hope to end this year positively, and a growth of 20% can be envisaged for the year to come. And the worst should be behind us for the material handling division. This should be the summary we can take home, sir.
Yes, definitely. See, as I told you, we want to make sure that we close the contracts and get out of the situations where all the expenses get booked and everything gets clean and neat, and we keep on making margins in the products that we sell and the spare business that we do. And going forward, we bring in new product lines that would bring in further improvements in margins.
Thank you. We'll take one last question from Karthi from Swayas Advisors. Please go ahead.
Sir, good afternoon. Thanks for the opportunity. A couple of questions, sir. One, I'm being slightly greedy when I ask you this question. Given the traction that you're seeing internationally, is it conceivable at all that in, say, 3 years' time, you get to 1,000 crores of international revenues? I'm being specific when I say international revenues.
Next 3 years would be difficult.
Yeah. When I say FY25?
It would be difficult unless there is some inorganic acquisitions that take place.
Right. Say 700 would be a ballpark number possible, and I know I'm pushing this, but just indulge me.
See, as I told you, I would say 500 to 700 crores, around about that is possible.
So the other question, sir, is in the domestic market. You spoke about being particular about profitability and payment terms, obviously. So are you seeing customers being pushy, or are they willing to wait for you to come and come to a more agreeable position? How exactly do you perceive the situation here? Is there a risk that you become a persona non grata at a certain level because you're not taking orders below your terms? How exactly should one think about that?
In gear,
the screen is frozen. Oops.
Looks like there's some connection issue. We'll just get back. Yes, sir, you can go ahead. You are in mute. Sorry.
You are in mute mode, sir.
Yeah, I got cut off in between. Yes, I will answer that question once again. In gear business, we have seen that the customers are willing to pay the price. Hello?
Yeah, I'm with you, sir.
Yes, customer is willing to pay the price that normally we request. And the reason is that we have an edge and superiority over the competition. Okay.
Yes.
Due to various reasons. As long as material handling is concerned, if it is a government tender, then the lowest is the one who gets it.
Okay.
Okay. So that is a very difficult situation.
Sure. Sure.
And which is the reason why we have tried to get out of projects, apart from the fact that, as we mentioned earlier, that the customer in the end just doesn't want to pay you.
Correct. Sure. 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 And final question, sir, is in terms of raw material sourcing. I know that a lot of people have been facing challenges, both in terms of pricing as well as availability. How exactly are you able to handle that situation? Has that been a constraint for you?
No, it hasn't been a constraint, except the fact that the prices have gone up recently.
Yeah.
And there is a slight amount of lag before you are able to realize new prices from the customers.
Sure, 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 sure. Thank you very, very much, and best wishes, sir, as always.
Thank you. Thank you.
Thank you. That was the last question for the call. I would like to now hand over the call to Mr. Patel for these closing remarks. Over to you, sir.
Well, first of all, I would do for what I can assure you is the worst times have got over. We tend to go from a profit level which keeps on rising, because if you look at the last 3 quarters results last year and compare it with this year, we have gone up by almost 4-fold. Okay. The way things are panning out and the way we see the things in the future, we will be able to sustain these kind of profitability and go also on a situation where we will be able to improve them. So the scenario looks very healthy. And after a long time, we have been able to get out of the material handling situation where the losses kept on accruing. And now we are more or less at the end of the tunnel. Okay. So all in all, things look very rosy and healthy. And if the demand keeps on increasing, I believe that sky's the limit. So thank you all. And hope to see you in the next investors meet also.
Thank you, everyone.
Thank you. Recording.